Toyota is back in Formula One. But that is not what we are going to talk about today, even though I'm a huge fan of the sport. We are also not going to talk about their history and the fact that Toyota started as a textile company. And we are definitely not going to discuss how the company was originally named Toyoda after its founder and later changed to Toyota because the number of brush strokes in the Japanese katana script is considered luckier. Instead, today we are going to analyze and value the world's largest car manufacturer. We'll find out whether Toyota is an interesting investment at this moment, or is there a hidden problem beneath its success? If you were to invest $1,000 into this company 10 years ago, you could buy around 9 shares. And now they would be worth something close to $1,520. And Toyota also pays dividends, so in that time you would get $310 as dividends. So if we add together the current value of shares and the dividends, we get $1,830, and that is a gain of 83% in 10 years. Not great, but decent. Individual insiders, that is an X, only 0.2% of the company is owned by individual insiders, and we would like to see this number over 2%. What I found surprising and intriguing is that 2% of the company is owned by the Ministry of Economy, Commerce and Business Environment of Romania. That may be a smart move. Well, we will see. And are individual insiders buying? That is an X. We don't see any transactions from insiders in the last year. And do super investors own this company? That is an X. There are no super investors that put their money into this company, so of course they are also not buying right now. Return on invested capital, that is an X at 5% 10-year median returns. And we want to see this number higher than 10%, so not great. And what do we know about net profit margin? It is a check averaging 8.3% over 5 years, and the sector median is only 4.6%. And now let's take a look at share buyback. It is a check. In the last 10 years, they bought back 15% of shares. So long-term shareholders own a bigger portion of the company without making any extra investments. And the debt? It is an X. It would take over 12 years to pay the long-term debt with a recent free cash flow. So that is a major red flag. We usually want to see this number below 2 years, and such debt can, in certain situations, push a company into decisions that may hurt its business in the long term. That is definitely a problem. Revenue growth, that is an X at 1.8% 10-year compound annual growth rate. And we would like to see this number higher than 10%. So revenue is growing, but very slowly. Free cash flow growth, that is also an X at minus 4.3% in the last 10 years. So it is a slow decline, something we never like to see. And earnings per share growth, that is an X at 8.1% in the last 10 years. So actually, that is not bad. Thanks to cutting costs and repurchasing shares, they are able to achieve such growth with much smaller revenue growth. The dividend yield is 2.5%, so shareholders can expect to get $4.39 annually per every share. And the payout ratio, that is a check at 32.7%. And we want to see the payout ratio somewhere between 20 and 50%. So that is a very nice dividend. We get a big portion of the earnings, but the company still keeps a lot of cash for its growth and operations. And what about dividend growth? It's a check at 28.8% 5-year growth rate, so it's a significant growth, but we have to remember that there are two factors that influence this growth. One is currency fluctuations, but the main reason is the massive decrease in dividends in 2019. Price to earnings ratio is 6.9, so not a lot. Maybe Toyota is actually nicely priced at the moment. Let's find out by using the discounted cash flow analysis. And we will make 3 scenarios of its future growth. So in the low scenario, we will estimate a growth of 2% for the first 5 years and then 1%. In the medium, 3% for the entire 10 years. And in the high scenario, 5% and then 4% growth. So the low scenario is below the predicted market growth for the next few years, which is 3%. Medium shows a story in which Toyota grows with the market, and the high one is a scenario in which Toyota outperforms the market. So with such estimates, the intrinsic value in the low scenario is $33, in the medium $43, and in the high scenario, $57. But we have to always apply a margin of safety to those prices. I use a 30% one. And with such a margin, we get in the low scenario $23, in the medium $30, and in the high one $40. And the current price is around $171. It is all in the red. Toyota is really expensive. And the huge debt has a significant role in this valuation. When we are buying a company, we are also buying its bank account and its loans. And in this case, the net debt is over $92 billion. So let's try to sum up all we talked about. We have a company that has a great brand and a dominant market position in certain sectors of the industry, which shows, for example, in much higher margins, and a nice dividend program. On the other hand, we have slow growth, but that is to be expected when we are looking at the biggest car manufacturer in the world with a staggering 10.8 million vehicles sold globally in 2023. But the real problem is the debt. I don't believe that it will pull Toyota under anytime soon, but all the payments, interests, and so on make life much harder for Toyota. Let's actually go to our Stock Ranking Pro, which you can get access to by becoming a Patreon, and let's use a really helpful brand new feature that allows us to group all the companies we ever analyzed on this channel by industry. And that way we can easily compare Toyota with other car manufacturers. And if we sort them by the amount of debt, we see that Toyota not only has the biggest debt, but this debt is almost twice as big as the second place. And when we look at the value difference, we see that Toyota is actually the most expensive car company on our list. So I think that explains why we don't see super investors or insiders putting their money into Toyota. Well, I like their cars, but I don't think I will be following in the footsteps of Romanian government anytime soon. If you would like to learn more about Stellantis or BYD, which are much cheaper, then check my analysis of those companies. Thank you so much for watching and see you in the next one.